Hey everyone, welcome to my YouTube channel. I put out videos daily talking about ways to generate streams of income, create the wealth, get the goals, and get the financial freedom, or pay off some bills, or whatever your goals may be. You can earn them online by generating streams of income. So I put out a couple videos. Today I'm putting out another one. This one's going to be regarding some cryptocurrencies. So before you get started or watch the video, check the video description. If you don't have a lot of time and you need to go to specific information, there's timestamps in there where you can jump around. I have the income disclaimer in there, basically just making you aware that I'm just a normal person on YouTube. I'm not a financial advisor. None of this should be taken as financial advice. I'm just showing you what I know, and this should be educational purposes for you to grow as a person and learn how to do technical analysis. In the video description as well, there's topics of interest that you might want to comment and let me know that you want me to talk about. There's other videos in the video description related to technical analysis, so if you want to learn more or look at some of the other videos that I've made regarding technical analysis, it's very easy for you to find and click. And then finally, what I want to mention is that when we get to 2,000 subscribers, we're going to have a giveaway. So please consider subscribing, liking, sharing. Put this out to social media to other people that you think might want to generate some streams of income, generate some wealth, the time freedom, whatever it might be. This is the goal of this channel. I'm sharing the information I know and the things I'm doing to do that. And you guys got to take a look at it. Digest the information I'm sharing and do your own research and consider if it's right for you. By becoming a technical analysis expert or practicing more than 10,000 hours, you'll get the skill set to allow you to trade in any market. This is applicable to Forex, crypto, stock market. Technical analysis is broad. So just because we're practicing it with crypto and Forex possibly on this channel doesn't mean that you can't extend the information to the stock market and other types of assets. So take the time, put the time in, practice, try to replicate what I'm doing so you can start seeing it for yourself. And the game will change, the lights will come on, and you'll look at the charts so differently once you start seeing how price action repeats itself. Again, there's no guarantee from prior results to future results, but you'll see high probable charts and patterns and things that happen over and over again. Whereas instead of just trading blindly, you'll go in with a better feeling that you've done all the homework needed to give you the best chance to succeed at trading. So I said it a couple times when it comes to crypto, I'm more of a bull than a bear. So you will not see me saying that I'm going to take a sell trade in crypto. Now with Forex, that's a different story. I'm not tied to any fiat currency. I'll take whatever trade comes my way, either buy or sell. But for some reason, I can't get it in my head to do negativity in terms of selling on a crypto, which, again, I said it in a couple other videos. I have to get used to that because there is going to be a time where there's going to be a bear market. So unless I'm going to leave all the money on the table and not take trades during that period, and just dollar cost average, I have to start getting used to realizing price will come down and I should take advantage of those trades as well as when it goes up. So with that being said, let's go into the charts. All right, so we talked about this a couple days ago. There is enough price action movement that it requires me to kind of give you an update, and we can reset the charts and figure out where we are and where things are going. So let's talk about VeChain first. Now, based on our last video, we were waiting for the breakout. The breakout has happened. You can see the volume profile has had a spike here. Now, everything is doing well in the market, so you're going to see most of the coins are reacting and are doing things right now. So don't be surprised when we go through these charts that we're kind of seeing the same thing happen in all the charts. What I can say here is that we had to break with the volume. It's obvious that the volume increased, so it's a confirmed break. It actually went up and touched our pitchfork line right here, which was kind of interesting. And now it's coming down, and it's probably going to check the level. So if you didn't enter the trade on the breakout, you should really wait to see if it comes down and checks this trend line that we draw on here between A, C, and D. If it touches it and bounces back off and starts heading higher, that's where, if you're not in a trade yet, this is where you can get into one, when it touches this and starts going up. So just be patient, wait for the price action to come down and check. You know, it's pretty close, depending on what time frame you're looking on here, but just be patient. You waited this long for it. Don't jump the gun. Let's see if it's a true breakout or if it's a fake out. So wait for it to come down, wait for it to start bouncing higher again. It may never come down, so you got to decide. I mean, you know, the other choice is to do, you know, dollar cost averaging down to this. It's a little risky, but the safe bet is to wait for the confirmation of support here. If it comes down here and doesn't come back into this pattern, and it starts coming back higher, then you know that the breakout is confirmed, and chances are it's going to go higher here. So these are the two targets that are still in play, and nothing else to really say here. These are, you know, you're gonna experience, just like here. You see, right? See how it hit the C peak, came up and hit C right here, and it experienced some resistance, so it came back down. So next time maybe it's going to have a higher momentum and it'll break through, and then you're going to hit the A. You know, then A is going to be another area of concern for resistance. So if you get into the trade down here, you know, this level A that corresponds to this peak right here, this green zone right here should be an area that you should consider selling some stuff. You don't have to sell it all, but you know, you should take some off the table, lock in some profits, and move up your stop losses. You know, move up once it starts heading higher, move your stop loss to break even. You know, put your stop loss here at the entry. That way, if it turns around and goes south, you don't lose any money, you don't make any money. It's a net even. And like I said in multiple videos, not losing money is making money. You're not going negative. You're not going back. You're staying where you are, and you live to fight another day. You know, when you get caught up and you try to cost average as it's falling down, then you just make it harder for yourself to make a profit. So just set up your risk tolerance, set up how much you're willing to risk in terms of your percent of the account balance. You know, pretty much they basically say somewhere between 3 to 5%. It could be a little higher with crypto. You know, with Forex, you know, you want to risk 3 to 5% on any one trade. And, you know, because of the volatility in the crypto, you might have to go a little deeper with that, just to allow yourself not to get stopped out so easily. So again, just to repeat, you know, as it's breaking away, you're going to see it come up. It's going to test. It's going to probably bounce between these two levels for a while because they're pretty close to each other. And then if it finally breaks higher, but once it starts bouncing between here, strongly advise you to move your stop loss up. That way you can't lose. So you're going to have the resistance of A, and then you're going to have the target set by the algorithms. They're all kind of pushing the price action to negative 2.36. And if it actually consolidates here a little bit, it's actually good, because then when it breaks out, you know, I have it drawn like this, but chances are it's going to break out. It's going to check before it goes higher again up to this level, right? So, you know, it's a standard thing. I showed it in all my videos. You go up, you go down, you go up, you go down. You don't just go straight up. And if you go straight up, it's going to come straight down at some point. There's going to be a retrace. So just wait for those retraces. Move your stop losses higher. Well, you know, once it checks these levels, move your stop loss here. So, you know, consider getting out 25% here, somewhere in this range. You know, as it bounces higher, you know, put your stop loss here and let the rest go until this target, at least 1-to-1. Now it can go higher than that, but there's a pattern target here, right? And then there's that I believe it's a 1-to-1 for the fib target. Then you got these higher ones up here. You know, maybe you take some more profits if it breaks through here, checks, and then comes up into this range. This is the typical range of an extension. you'll see price come up to this range. So once it bounces, here past this one-to-one target, you move your stop loss here, and all along the way, once you get to the break even, this is all, if you're in the trade longer, these are all guaranteed profits. Like once you do your stop loss here, you have from here to here of positive money that you're guaranteed. You can't lose by winning. Don't let greed get you. Scale out just like you scale in and lock in your profits and then move on to the next trade. There's always another trade. All right, that's all I got to say about VeChain. But the breakout is in play right now. It's coming back. Wait for the check. If you're gonna wait for that check, this area right here is where you should be getting in. Somewhere in 927 range, somewhere around there. But just basically make sure it checks this trend line. If it bounces off this trend line and starts heading higher, in this green zone right here is where you can start buying and lock into a position. So if you have $1,000 to do on this trade, consider doing multiple buy-ins. Maybe buy in 3 to 4 times or 5 times. Maybe do $200 at a time and build a position in this range. Don't go buying everything at one time because it might retrace a little further. And especially if it retraces back into this pattern, the confirmations failed. So this is a fake out. If it comes back in here, this trend line and this trade is negated. So seriously wait for it to bounce off of this and start trending back up before you enter a trade. All right, next coin. Voyager. Okay, so Voyager, I saw on someone else's channel that there was some negative stuff happening there where something related to, I believe, people couldn't take their funds out of the platform or something, that the cryptos couldn't be withdrawn. Kind of like you have with possibly like, with Robinhood and stuff where you have the coins there, but you can't, you really can't take them off and keep them for yourself. You have to just leave them on the platform. So I don't know how true that is. I don't do anything with Voyager, so I don't know firsthand. But you can see here, again, I always say, unfortunately, this market is still small, where if you have FUD or you have negative news, it will affect the price action. So even though you do your best technical analysis, the negativity could affect it. Although, even with the negativity and the direction of the price action, it should still kind of fit within the pattern target. So you can see here, I mentioned the other video that we might see some resistance at this level from the previous pivot. And you can see it touched the zone right there and it's bouncing off. So to see if it confirmed, sometimes you might have to drop down to a lower time frame. And you can kind of see it kind of wiggled its way around here. It came out, broke out, came back, it wicked in a little bit, but then it started taking off. So this, looking back in time is always hindsight, right? But this, once it started breaking down again is where you would have entered a trade. And right now, if I were in this trade, and there we go with the brush again. If I were in this trade, I would have had a target set somewhere in here. Now, this just touched the zone, so you got to really kind of consider what would have happened here. There's a chance that maybe my target might not have been hit, depending on what I picked for my target. You can see there's a big wicking area. It's not just a single price point. There's a wicking area all through here, right? So this, I have it drawn pretty small, but the true wicking area is here. And if you would have set it somewhere in the middle, if you would have kind of cut the difference and went in the middle here, somewhere like right here, you probably would have gotten out of some of your trade. So personally, it's still within this zone. If you're still in a trade, I would consider taking partial profits here. And if you drop down to a lower time frame, you know, you see, let me get rid of some of this. You could see here where it came down and now it kind of bounced up here a couple times. This is where, you know, is a good idea to put a stop loss somewhere up in here, because it bounced here a couple times and you see that it's kind of maintained this level. So if you want to guarantee yourself, you know, if you got in at the breakout back here at the confirmation that it kind of respected that line, then if you put your stop loss here, then this is guaranteed, right? There's no longer a possibility for you to lose the trade if you put your stop loss here. Once it broke down here and hit here, you should have been at break even. You should have had your stop loss somewhere up in here. So at that point, you have a risk-free trade. Now, you don't necessarily have to move this down with price action. You could leave it at the break even and just let it free ride. But as you're moving further away from your entry, you do want to guarantee, like, otherwise you'll wait for days or hours or however long it takes, and you could have just locked out of the trade and locked in some profits. Now all of a sudden, price action comes all the way down here again. Now you've went from having money in the bank that you could have locked in to not having anything. But if you moved your stop loss here, your trade would have been closed here, so you would have guaranteed yourself this profit. You gotta apply risk management. It's important. It's very important for your trading history and your trading success. You know, don't worry about trying to hit the home run. Move your stop loss here. If price action turns on you, you made something. Now that's something, whatever dollar value that is. You know, if you look at the percentage, if you would have got in from here to here, it's 5%. So now that 5% that you made on this trade can now be used for the next trade. So you got the compounding effect, like that. You know, when you chip away and you add more money to your equity that you can use for the next trade, your trades get bigger and bigger, and you're going to make bigger and bigger profits. You know, you still have to use the proper risk management, but now maybe this trade was only, say you traded $100, right? So $100, you made 5% on that. What's 5% of 100? So 100 is your trade, and you made 5%, so that's 1.05. So for your next trade, instead of using 100, now you use 105. Now, instead of making $5 on the last trade at 100, now if you do another 5% trade, now you're making 110. So you see how you increase the profit by 25 cents. Now it's all scalable, so it doesn't sound like a lot. But when you continue doing that and you chip away and you make your 5% and you use all that new money to do the next 5%, then it's the compounding effect that kicks in here. So it's important. All right. So right now it's still in play. We're breaking out of the pattern. It's heading down. You know, this is the next target here. Here's the pattern target. So just do the proper risk management, move your stop losses to break even or partial profits here, and just ride this down. Again, like I said, there was some negative news regarding this platform. I know about Voyager, but I'm not involved in Voyager as in terms of having an account or anything like that. So I don't know how true that information is. So if you have any information of why this is negative, certainly put it into the comment section so we can all kind of understand what's going on here, other than pretty much price action. That, you know, that's kind of like just news action. Okay, so next one, AAVE. AAVE is also breaking out, but we saw a little bit of an uptick in volume, but we're not getting anything big like this or this. So it's questionable. Maybe once it comes back and checks, you know, again, this right now you should still be in a holding pattern for the trade. You should possibly wait for it to come back down here before you enter the trade to make sure that it's not a fake out, or maybe this, you know, this pattern we have it drawn here, and there's a good amount of touch points. There's 2 touch points on the top, 2 touch points on the bottom. This one missed the touch point there. So in a higher scheme, this is a 4-hour one. This should be a legitimate pattern, but there's always a chance that maybe, maybe this didn't play out as well, and maybe there's something else going on here. You do see a reverse head and shoulder kind of thing going on here, so you can see that, right here, like a little head, shoulder, a head, and a little shoulder. So this is also a W pattern, right? And it's angled upward. So that was kind of a telltale sign that we're going to have some upward mobility. And this is also known as a double bottom. And when the second bottom is higher than the first bottom, it's angled upward. That's usually a trend reversal in whatever. If this was a downtrend, then it's an uptrend. And then you got the same thing going on with the M's. If the M is like that and it's facing downward, if it was an uptrend, this is a signal that it might be changing from up to down. So these are good. These patterns show up all the time. You should be on the lookout for it. Head and shoulders, I like them, but they don't always play through. But these W patterns, when they're angled, they kind of help you see. And when you start getting even better at price action and technical analysis, you could look at divergence as well. I haven't brought that up yet at all in our charts here, but it is something you look for. If there's higher highs in the price action, but there's lower lows, for example, in the RSI, that's a divergence. And when divergence in one to the other, whatever, if the trend was up, you got the bearish divergence, you got the bullish divergence, you got hidden divergence, you got all these different divergences that we'll get into down the road. I don't want to overwhelm you with too much stuff, but that's also something to consider when you're looking at the price action. You see a W, and then if you see the opposite, if you see downward pointing divergence in the RSI with a double bottom, then if the trend was down, the divergence plus this double bottom really gives you an idea that price action might change direction. So wait for the confirmation. Do the stepwise increase of your stop loss as things go higher, or if you find out that this doesn't hold, don't take the trade. And we got to take a step back. We got to look at this pattern again, and we got to find out what's going on. Again, this is the initial target, which is at the level of D. Every major peak in price action is going to form somewhat of a resistance for the price action to get through. So you might see some rejection over here. You might want to consider taking a partial profit if you get in down here. You might want to lock in some profits. If it breaks through and comes back and checks, then you consider moving your stop loss higher. At a minimum, once you get up in this area, your stop loss should be at least at the entry price, which is considered break even. At that point, you're not losing any money. You're guaranteed not to lose any money on the trade unless there's like some major flash crash, something crazy happens like that. But on a typical price action trading, if the price turns the negative direction, you'll get stopped out at break even or partial. Like if you want to put a couple of dollars ahead above the break even to account for commissions or trade costs, you could do that as well. That way, even though if you put your stop loss at break even, at the entry, you're not really breaking even because there is going to be a cost of the trade to get in and get out. So if you know what those fees are, you can tweak your stop loss a tiny bit into profit to cover those costs, so you're really not able to lose anything on the trade. But losing a little bit for commissions on a trade is a small loss. That's part of doing business when you're doing trading. So you can make your decision on that. Just want to check something here. It might be time to tweak this a little bit. See, it's kind of up to debate, or you got to kind of decide how to go about this, because first of all, you got to make sure these peaks are right. You can get, I could spend here more time than needed, but it's very important to really make sure that these are representative of what is really going on here. You got to, make sure the pivots are correct. And for some reason, on different time frames, the pitchforks kind of get skewed a little bit. And I take off these pivot numbers. It's harder to see with those pivot numbers. So you could tweak that like that. Hit price action to, then you could kind of come back and look to see how, like right here, got some action on there, got some action there. So this seems to be a pretty strong trend line. So right here, look where this pivot, this pitchfork line kind of goes through here, and look where it, it's right here at the trend line from the previous D. So when it comes back down, there's a good chance that it might respect this pitchfork line as well. So you might see a nice check and bounce, off of this with a wick. It might look like something like that, but over here, the body will close above this pitchfork line, but the wick might come back and touch like it did here. I mean, in some ways, if you really come down to lower time frames, it kind of broke out and kind of checked it already. It's just the problem is when you start going down to lower time frames, you get more noise. It's like right here, what candle would you consider the breakout, right? And you're going down to the 1 hour, you got so much stuff just around here. Which one would have been your check? I mean, this one kind of came back into the pattern and came back up. This right here might have been the one at the 1 hour. But again, I like looking at higher time frames. And again, I think this is the one that was actually the check. So it's already kind of bounced off. So this, what I'm saying happened over here, actually happened right there. So you should be, if you wanted to take a trade, you could have been in the trade right here. Because it did bounce off here. It broke up and it checked it, broke up, checked it again, checked it kind of 3 times. It tested it and it stayed. So this is a legit trade right now. You're in a trade. So this already happened, this check. So really what you're doing right now, you should be moving your stop loss should be at break even. So whatever you got in at, you should have your stop loss drawn, moved to that level. So if you entered here, that should be your stop loss. So now you're in you're not going to lose, and now you're waiting for this to come up here. So as I said, when it comes up here and it hits this, there's a good chance it's going to fall down a little bit. And if it falls down, chances are you see this peak right here. When it pushes back up, it might come back and test. Might come back and test this level because this was a peak. So this might be the support line, and you might want to put your, we'll see how it plays out, but you might want to put your stop loss underneath this level because this is a resistance level. So resistance now is going to turn into support when it comes back down. Again, I draw it as a line, but it's really a range, right? It's a range. So we could see something like this as a support line when it bounces off this next level, and this next level is based on the D. Right? So you got the first level, that's kind of this peak right here, this support right here, that's this level. When it bounces off there, it's the D level, which is, the previous peak, so you're going to start seeing some resistance there, and then it's going to probably bounce in between here a little bit. So if you have your stop loss down here, you're not losing, and you're allowing it to build some momentum to push higher again. It's just not gonna. It could like cut cut this through like a hot knife on butter, but chances are it's not going to just go straight up. You're going to have a push, a little bit of a consolidation, a little bit of a retrace, and then another push, some more consolidation, then another push. You know, that's how price action typically happens. And we'll come back and take a look at this. If it breaks through here and it hits here, we'll come back and see if it's kind of doing what we anticipated to do. And just remember, these pitchfork lines are also going to come into play here for support and resistance. You can see how it hits resistance. It broke through but fell right back down. Over here it broke through and then it checked it a couple times here. So these pitchfork lines, if drawn and if they actually are in play, can also give you an idea of where support might be. So like, for example, if it breaks through here and it starts moving back and forth, you can see as time goes on, this angled pitchfork is going to push price higher if it respects this line. Right? So slowly but surely you're going to be squeezed into this area. You know, and you can see, like, based on that, what you can see is where is it? You know, what could happen in this area as this pitchfork happens. You could start seeing a triangle formation that's going to be forced into an ascending triangle based on this pitchfork and based on this resistance level. So as the price continues to come through here, you know, it's going to hit this apex point, and ascending triangles tend to go up, so you might see it push higher as it gets closer to this apex. This is the apex. Usually 80% of the move in a triangle, ascending triangle, descending triangle, that's usually when price action tends to break through either the up or the down, whatever way it goes. We don't know which way it's going to go. It could come down, it can go up. But usually at the 80 percentile mark from the entry to where it's hitting the apex is where the breakout typically happens. So it's just kind of forward thinking of how things could play out. You could see the squeeze from this pitchfork to this resistance level, and that'll form an ascending triangle. And then from there we can wait for the breakout higher or lower and take action when that happens. So again, I'm getting a little ahead of ourselves here, but this is just kind of the things you'll start seeing when you put stuff on the charts with the resistance lines and the pitchforks. You can anticipate, okay, well, maybe there'll be an ascending triangle later. Once it gets through here and kind of consolidates in this range, if it doesn't break right through, you can start seeing maybe higher highs getting squeezed, and then a push higher or a push lower based on what move it decides to make. All right, next chart. So really just wait, you know, consider taking profits if you're in a trade. You know, just dollar cost average your way out of the trade and see what happens here. See what happens in between these two ranges. You know, the D and then the previous high here. All right, so next coin. Sorry for the long video, but this is all good stuff. I mean, if you have the time, come back to it and watch it and kind of just, you know, start visualizing these patterns that are not even there that could show up based on the pitchfork and the resistance levels that we're drawing here. All right, the graft. The graft is breaking out, and I'm doing the brush again. The graft is breaking out. There is some good news and some bad news. There is a pattern showing up. Now, again, just like the last trade, so the breakout did happen. The volume is high, but it has not come back to double check the level. So you should not, if you're waiting for this breakout, it's in play, but you really should wait for it to come back down to this trend line to make sure it checks that level and respects it, and it becomes support now. So resistance, 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 resistance. It broke through. Now we're looking for it to be support, to support the price action higher. So wait for it to come down and bounce off this level right here drawn by this trend line, and then enter the trade. I would not be entering a trade yet. Although, depending on your risk tolerance and how much money and what you want to do, you could start buying small. You know, if you're going to put $1,000 in here, you could start buying maybe $100. You know, $100 here and there, and build yourself a position as this is happening. I've done that before, but you run the chance of it just breaking right back in here, and then now you're screwed, right? Because you were hoping for it to buy, and really the buy was a fake out, and it wasn't. You know, your true safest way of doing this is to wait for the bounce off this trend line. So again, these targets are still in play. You know, I talked about the risk management here. I'm not going to do it again. You can go back and look at my last video about the graph to kind of see where this all came from. What I do want to share with you is a 4-hour. So we have the head and shoulders, and it looks like it might have played out. So I'm gonna clean up some of this. So the head and shoulder pattern was, yeah, so from here to there. So the head and shoulder, inverse head and shoulder pattern played out. And just like I talked about in my last chart, this head and shoulder is a composite of two double bottoms, right? Or a triple bottom. And it's a W formation, right? So again, I mentioned it in my last video. There's a W here, right? But it's facing down, which is not good, right? You don't really want to play with those. The ones you really are curious and interested in are the double bottoms that are angled up, because that basically tells you that there's a trend reversal in play here. And again, I didn't get into it, but you know, if you're looking at the RSI and you see divergence at the same time, that's a very good indicator that, you know, there's going to be a change in trend. So this was a very nice inverse head and shoulders. The pattern target was hit, but the important target that I mentioned in my last video is the fact that this came down here, came back up, came here, and then went up. This is a double bottom. Right there is the first bottom. That's a double bottom, and it's angled upward. That tells you that the trend was coming down, and now you're going to change. There's a high probability change in direction from a downward trend to an uptrend. And there's important levels to break to confirm the uptrend, but at a minimum, if you play the breakout of the W, you know, your pattern is up here. So it would have hit the target, and then now you got to decide what's next. Now you should have been out if you took this trade at a double bottom and entered here. You should have got out at the pattern target, and now you're waiting for the pattern, the larger pattern that we have drawn here of this trend line to be broken. So this was the next possible trade that you're taking. You're still waiting because it hasn't come down and confirmed, but this is the next trade that's in play right now. Now on the 4-hour level, there's something called a Gartley pattern forming. So if you take this and you do the cipher pattern, and you start up here, come all the way down to the bottom, you come up to this peak here, come down to this valley here, and then we got to put a price up there. So let me just move this target down here. So the price target is 2.216. So 2.216. It's sometimes hard to get the exact value, but you get the idea. So this is good though, because now it's, you know, once this is confirmed, this could be a new anticipated target that you can put on the radar for you to maybe sell some more. This is a bearish pattern. So if this Gartley gets completed and price action moves up to this level here, you know, price level is 2.216. 216. So let's just do it the easy way. 2.216. That's where this D, if price action goes to that D, this Gartley pattern is confirmed. And what that does mean, though, is that after it hits this target, there is a retracement that's going to happen because this is a bearish pattern. So it's basically saying you enter a short trade here, and price action is going to fall back down. So how long it falls and all that, we'll worry about that once it gets to D. I'll show you how to figure out the downward targets if that's something you want to take. But, you know, once this confirms and it starts bouncing higher, you know, ironically, it looks like D is equal to the previous high here. So that would have been an obvious target to take anyway, right? X is basically this wick right here. And that basically is saying where D will be. So it will be a double top, right? That'll be a bigger formation of a possible M, right? So in staying with the discussions about M's and W's, if this Gartley pattern, if this Gartley pattern plays out on a higher time frame, you got this M, you got this, and then you got a big down here, and then this will be the second part, and it'll be, and then that, you know, that's a signal. M's are down, W's are up. Now a double top, it also signals a possible change in direction. So this D coincides with a double top, and if this Gartley pattern is confirmed, price action direction could decide to come back down. So there's a lot of stuff on this chart. Let me just get rid of what I just drew. I just wanted to show you that there's M's and W's happening everywhere here. So when you start seeing it, you know, you can really start playing the price action with the M's and W's. Those are double bottoms and double tops are all over the place. And they're, you know, you play them the right way, you can be profitable doing that. So let me just get rid of some of this. I'm going to get rid of the M's and W's because we talked about it on a number of times here. I just want to clean up the screen a little bit. Alright, so again, right now we're waiting for this. We're waiting for this to come back down here and then check and go up. Don't get into the trade until it confirms. Alright, so that's all. It's all good stuff. We didn't get in, like when this pattern's on here like this, you know, we could do the pitchfork as well. We didn't get into that. Just gets a little crazy after a while. It's a pain in the butt sometimes to get these placed right. So let's just go in here and do it the right way so that we're set up for success. We don't really have, actually, we don't have a second touch. So we have to just kind of do a best fit here until we get some more price action. So if you want to go with these touches down here, this is how the pitchfork would look right now. We probably won't see enough information until that's all we could do now. We could just touch that second wick right there. It's so close to the first one that, you know, it's questionable. But that's all we have now, and that's all we can do. We could just put this here, and ironically, you could see, you know, things are kind of representing. See how you got the resistance here at this pitchfork level? So it is kind of respecting this pitchfork right here. And we're not there yet, but the same thing I kind of did on my last video, you know, with the triangle could be done in all these areas. So you have price action here, you got a resistance level here, you know, you could throw a triangle here that, you know, could be where price action is going to consolidate and finally break through this level. So this is how you play the pitchforks with the resistance level. You can kind of see how things might play out, and you can start anticipating the next pattern that you're going to look for a breakout on. So after this checks and it bounces up to here, you consider selling it because it's probably going to bounce in this area for a while, and then you wait for either the break down or the break up to do the next trade. Alright guys, so I think that's it. Yeah, so that cycles through the 4 that's here. Just wanted to kind of give you guys an update on these. Look for my next video. Please consider subscribing to my channel, liking, sharing, and commenting. Let me know what you think, what else you want me to talk about, what other coins you want me to talk about. We got probably about 12 to 14 that I've set charts up with that I just kind of cycle through and just update, you know. So practice. Put this stuff on your chart. Let's see how things play out. You don't have to take real trades, but just pretend like you got in here and see what happens. See if you're successful or you fail. They call it paper trading or demo trading. Unfortunately, there's not a lot of exchanges that allow you to have a demo trade account for crypto. It's very popular in Forex, where you can sign up to a broker and they'll give you some virtual money to play with, to practice, you know, and you could practice, you know, doing your trades with fake money to see how you would do. But with crypto, you're going to have to just kind of keep a trading log, say I entered on this day at this time at price blah blah blah, and you know, do your charts and see if your trades hit your targets. Or if something else happened, and make a note of what happened and why it happened, what you did wrong, what nonsense news came out, or what manipulation happened, or whatever it might be. You know, take notes and then take the lessons learned from that. You know, the only way you're gonna realize what's going on is if you take pretty much like an after action report. You know, that's a term. Like, so basically after something happens, you get together and you brainstorm and you lessons learned on what happened and why it happened and how you can make it better, what you did wrong, what you did right. Was it your fault? Was it something that's external that had nothing to do with what you were doing and everything you did was correct, but something else, an external influence, caused price action to do something different? Those are out of control, right? The only thing you can do to minimize the effects of those things that you can't control is use proper risk management. Move your stop losses. Lock in the profits when you can. Take a step back. Wait for the next trade. There's hundreds of cryptos out there. They're all setting up new patterns. You know, you could put an alert here. Like if this is a pattern that you think might play out in the future, put an alert on here to let you know that price action has moved into this pattern. That way you know to come back and look at that chart. So you don't have to sit in front of these charts all day. You just set up the traps. You wait for the price action to fall into those traps. And then at that point, you basically have a logic tree of what you're going to do based on what price action is doing. So you have a plan. It's called a trading plan. You're not just blindly buying and selling. You have a price like, okay, if price action breaks above this level, I buy. Breaks below this level, I sell. As it moves up, I move my stop loss up. I go to break even. I go to minimal profit. Then I wait for the next pivot. I move my stop loss up faster. So it's important for you to put down on paper what you're going to do so that it becomes repetitive and non-emotional. You're just going to do it. You're not going to think about it. You're going to confirm everything is right and you should take the trade, and you're just going to mechanically do it like a robot without thinking about it. When emotions get involved with trading is where people fail. And that's why 95% of the retail investors fail, because they have emotions. So there's other products I use for Forex trading that takes the emotions out of it. It's basically a set of rules that you set up and you apply to the price. And it does its thing without you thinking. You set up your risk management, you set up the price action, what you want to do, how much you want to risk, how much all that stuff is set up and predetermined, so you don't have to think about it. The only thing you got to think about is turning the software on and turning the software off, making the settings based on your risk management and your risk appetite, You know, those are all things you configure in the software. And there's a manual things like you turn software off for news, and there's all these different strategies. But you don't need to be a trader to use the software. You just got to configure it correctly and manage the software correctly. And it's not a set it and forget it, but it's a really nice way to take out the emotions of the trade. You know for sure you have a low risk profile set up on the software. You know the software is going to enter and exit trades based on pre-configured numbers. So you don't have to doubt yourself. All right, should I stay in for a little bit more profit? Should I look for 5 more pips? Should I look for 10 more pips? None of that has to happen. The software is already, you decide how many pips of profit you want, and you set it, and then you don't look at it, and you let the software just act like a robot without emotion. All right, targets hit, I sell. All right, I enter here, I sell here. I'm not gonna change my target price because I think I can get more out of it. I'm gonna set my stop loss, the same stop loss every time, 1%, 5%, whatever the equity risk you want. Those are all things that you take out of the equation when you don't have to double guess and change things because of greed or fear, right? Those are the things that you kind of self-sabotage yourself because you're changing your plan. You went in with a plan, but then, oh wait, well maybe a little bounce. Oh wait, maybe a little bounce, and it just continues going in the wrong direction. And next thing you know, you're over leveraged. You don't have any more money to cost average your price down, and your account gets blown. So if you're interested in some of that other software, comment, get in touch with me, look in my video description. There's other opportunities where I talk about that software. Forex trading is basically where that software is being used right now. So if you're interested, click on the links related to that opportunity, and I will provide more information for you and put you on some webinars and some video conferencing so you can see the products in action, and you can decide for yourself if you're interested. So with that being said, take care, guys. Have a great weekend. Look for my next video of the next 4 cryptos that I'll give you an update over the weekend. All right, take care.